Okay, let's get going here. Start off today. Take a look here at start with the NASDAQ. We had this in the newsletter for today, and we're right at a key support level right here. We've undercut it and gotten came back up, rallied a little bit here today, and of course we have this next support level around 2,900. So, a lot could happen here. I mean, the market could still get, roasted. It could get really nailed really hard. But um, on these initial breaks like this, when you break the 20 and the 50 period moving average, I would rather, grab a piece of this and look to get back into a bounce, because generally things just don't come unglued that fast on this first attempt, this first shot lower. So. If they do, they do. We just, we just have to wait for setups to occur. But I think it's a little bit late here to try to chase things. So, we're in stuff. We made some money in SOXS, and we're still in EEV. So let's take a look S&P, see what it's up to today. Let me get rid of this trigger here. Okay, so the S&P is acting a little bit better than NASDAQ here overall. Once again, an undercut of yesterday's low, and we have these two swing lows as the next significant support level. I mean, expect to see a lot of volatility intraday until the market starts to clean up. If we do end up in a trend reversal here and get into a bear market, the moves are going to be abrupt on both sides of the market. So, we have to be more stealth-like at getting in and out, and that's one of the reasons that we were quick to get out of SOXS today, particularly given the fact that we're dealing with a leveraged inverse ETF. So there can be a lot of slippage there day over day because they reset those things every day. The Dow's shown the most relative strength recently. Right now, we could, at this point, we're just looking at an undercut of the 20 and 50 period moving averages. And, we could easily recover off of this and get back into this trading range right here. But we don't, we really don't want to be long anything right now. It's just kind of dangerous, particularly when markets can gap real quickly. But, we could end up just with an undercut here. We could come back up into the range, but we could just as easily get whacked on the Dow also. But things are kind of chopping around today. They're up and down, and there's no, this is more of a day trader's environment today. You can't really get in there and do a whole lot. Mid-cap stocks. Let's take a look at mid-caps. And we're just, we're holding the 2 day, Friday's low basically. We just got some consolidation going on here. That's pretty much what we're doing across the board in most everything. Just hanging on to these this 2 day level. So once again, you notice here on the Russell, big support level here, but it appears that if we get a bounce out of the Russell, if we were to get a bounce back up until, let's say, the 20 period moving average here, this brown line, and then a retest of this support level around 784, then the Russell could get hit pretty hard here, and we could see a pretty sizable drop. It's arguable that we have at least a head and shoulders like pattern going on the Russell right now. Left shoulder, this is the head right here, and the right shoulder. But right now it looks like the right shoulder needs a little bit more time to develop. That's why we want to see a bounce. Give it a few more days to develop, and we'd have a little bit better symmetry. But, for the moment, even if it's not, we know this is a key support level right here at this 784 mark, right around there, 783. So if we lose that, then likely we come down and test the 200 period moving average. So we got going there. look at some internals. And we're about 1-to-1 across the board. So up volume to down volume is about 1-to-1. So, you know, kind of an ambivalence in the market right now. And volume, we're tracking lighter on the volume today. So it's still early in the day, but we're not really doing a whole lot. So the market's just kind of indecisive here. So it's probably not a point to be looking to commit to any positions or anything like that. You could, you know, we could easily revert, just as easily reverse higher as we, you know, could go lower again today. But obviously, there's a bearish bias right now, so you know, we're going to want to tend to stay on the short side. Let's look at EEV real quick, and we just have some consolidation going on. You know, consolidating at Friday's high, as we might expect after a couple of big up days. If I'm looking at the 60-minute chart here, you know, here's our key support on the 60-minute. We tend to refer back to this a lot when we're in a position, and we're looking to stay with it, you know, for a few days. We watch the 60-minute, and you know, does it hold the 20 period on the 60-minute chart? If it does, then you know, we know there's a pretty good likelihood we're going to head higher. And obviously, this swing high right here is, you know, more kind of a double top thing. I mean, it's not technically a double top, but we have the same swing high, and if we get above that, let's just see here, that's right around, you know, around $28. So $28 is going to be a key price point for this. And if we get above that, then we should see a pretty good pop. And, you know, obviously we also have some pretty good support here at these swing lows, this one and this one. And of course, we're above all these moving averages on the 60-minute chart. So, you know, we should hold up here. Okay, here we go. There we go. All right, so SOXL, you know, not surprising. I mean, or SOXS, I mean, not surprising that we're getting the same kind of consolidation action. But given the fact that we, you know, we're in the money 2-to-1 on the trade, we just felt it was prudent to take profits here. And, you know, if it sets up and gives us another entry, then great, which we would potentially have another entry right above this $40 mark. So if we got a pennant formation going here, we could always look to re-enter about where we got out, and you know that. So I didn't see that we're giving up a lot. Obviously, you have the situation where if it gaps, then you know you really can't easily get in the trade. Puts more risk on the table, but you know, for right now, we were happy to. You know, when you get 2-to-1, 2.5, 3-to-1 type moves, even if you're not at a target, there's nothing wrong with taking profits there because the math is in your favor. The mathematics is in your favor, and that, you know, because that's what we're consistently looking for. Assuming that we only get 50 or 60% winners. If we have that kind of ratio in our hand, then we want to take it. Let me see what's going on here. Yeah, a lot of stuff that had been showing relative strength is really starting to break down now. Things are struggling, no question. Let's just look to see what some of the leaders in the ETF world. Pharmaceuticals still holding up okay. I'm just looking here. Same with biotechnology hanging in there. If we start seeing like you know, biotech and pharma taking a nosedive, then you got to you know, become a little bit more concerned. Right now, retail has been holding up pretty well, but on Friday we had a reversal candle, and now we have another intraday reversal going on here, and we got below the 2-day low. You know, I could see a situation in which if we get below today's low on XRT, 60.44 that it could really fall hard. And obviously the next support right down here, right around 58.75, 58.60, something like that. So yeah, the market's not looking really hot here. And if you watch these the leadership ETFs, if they start following suit and coming unglued just like the weaker ones, then you got to figure the market's in for a little bit more selling. But the biggest thing, I mean, I like the short. I mean, I spent a lot of time over the years learning how to short and be effective at it. And things I've learned is you definitely have to watch your timing. You can't ask for too much out of the market on the short side when the crack, if in fact we are going to crack here a little bit, when things are first heating up, you got to be careful because you can get whipsaw reversals and just really get destroyed trying to get overly aggressive on the short side. But once you have the confirmation and you have the trend reversal in your favor, in other words, you set like a lower high, lower low, another lower high, and then you're breaking the previous lower low, now you have a trend reversal. That's when you can start to get a little more aggressive. Buffalo Wild Wings looking really bad here. Something to look at. Just you had this big reversal candle. Well, the first sign was you had this big blowout day, and then we recovered on lighter volume. Then we tried to get back above this 50-period moving average, and we ended up with a big reversal candle, and that's not a good sign at all. And that was on bigger volume also. And once you broke below this reversal candle, pretty much put this in some jeopardy here. So we'll see how, you can see how this plays out. But it's the only thing you run into is when you're dealing with things like Buffalo Wild Wings and you're above your rising 200-period moving average, and we've had an upsloping 20 and 50 for a while. You got to be kind of careful getting aggressive on this type of stock that's had a lot of relative strength over the past several months, and has been in a nice uptrend for quite some time. So it broke out from a base here and made a nice move. So you have to be careful when you try to go after this type of stock, versus if you find something like Google, for instance, that's been in a chop fest for a while. It's been a real mess. I mean, it's just pretty much staying in a broad trading range. Something like Google can offer a little bit more opportunity for particularly if it would break below the 200-period moving average. If we got some tightening sideways action here for a week or several days, got an inside day tomorrow, something like that, and then break below this 200, I mean, it could really be in a lot of trouble. And this is something that cracked its moving averages some time ago. The 20 crossed over the 50, so you have a lot of things going against it here. That's you have a much better chance of not getting shaken out of a trade like that. All right, so really not a whole lot. I mean, I think pretty much you got to evaluate things at night and see how these moves play out. But I think we're in a position that we've caught the meat of the move with SOXS, at least this initial move, and EEV. We're pretty well positioned there also. But anyway, I'm going to turn things over to Rick here, and then if you guys have questions and so forth, feel free to just type them in. So
let's get a chart of the S&P 500 up here. This day right here, 5-1 we sold some of our long exposure, I believe on 5-2, or I mean, at 5-1 we got the signal, on 5-2 sold half, and I believe on open on 5-3 we sold the rest of our exposure. Or was it on Friday? I'm sorry, on Friday. Yeah, Friday 4. So on the open we of our long positions. At the open, we got out and we pretty much avoided much of Markets pulled back about 4% off the highs, setting higher lows. We could undercut this range and eventually come higher. But as far as long setups, we're not gonna. The model's on a sell signal. There's just nothing much to do for us. So I know there's an urge probably to try and trade today, and NetEase is a good example of that. And I got to be honest with you, I really wanted to buy NetEase today because of the nice reversal bar. But if I recall back in the day when I used to do this, is maybe NetEase closed today, maybe it closed 60, 70, and then tomorrow it might open at 59.50 or even worse at 58 if the market is trashed on a big gap down. So it's tough to manage risk at this point in time, and there's just no point in trying to get a leg up on the market, try to fool the market here. Really, I mean, in the end, our model is good enough to make money if there's patterns there. So to try to make something out of nothing is just a lot of probably a lot of headache for no good reason, really. Very little reward for the risk you'll take. I'm pretty certain of that. As far as sales that are looking pretty good, still hold 20, making higher highs and higher lows. It's a good sign. UA, I don't know. It's gotten really wide around this level here, so I mean, we'll continue to look at it, but maybe it needs to go a little bit lower. SWHC looks pretty good. False breakout, volatility, which is to be expected when the market reverses. So, as long as it holds above, I'd say this swing low down here, 771, it should be in good shape. And TISA, ugly sell-off, and we sold. For those of you in the chat room, we alerted everyone that we're going to get out the following day. We told you guys to get out around the 490 to 5 area into the close. Today we sold that market on the open, so locking in a gain. In hindsight, I probably should have been happy with what we had and sold in this level right here, the 520 level. And make mistakes, and we still made a profit out of that trade, not as much. Probably would have locked in about $300 out of the 5, and we ended up locking in about $150. But selling here is better than sticking with the position and getting stopped out back by our entry, or even worse at this level here, which is probably where some people got hit on Friday. So, and NetEase, of course, looking pretty good, continues to hold up. If it continues to stay above 58.80, that'd be great. And you never know what could happen in the market in the next few days. As it stands right now, we're anywhere from 4 to 5 days away from having a follow-through day if everything were to happen perfectly. So, it's going to take some time. There's nothing we're going to do on the long side before those 4 or 5 days. And what's a little concerning to me is that IWM is a little bit messy here, and it has the sloping low with 20 below the. It's getting, like the small cap stocks. It's what we do most of our damage in, where we make most of our money on the small and mid caps. So mid caps is looking a little bit better, but the stalled out here. Hopefully these indices can just maintain these lows somewhere around these levels and bounce back up and go sideways and then eventually break out to the upside. I don't think at this point in time that we're going to see a rally before the summer. I'm not trying to predict anything. That's not what we do, but you factor in we're going to be done with, by the time the market even settles, stables, it'll be mid-May, and June, July is not exactly the best months for. So we might get some sort of bounce. We could, we might find a market that's basically range bound from back to the S&P. We're going to see here to here, and we might just have to buy relative strength and relative weak with no true buy signal in place. If that is the case, we'll be taking very small size because I'm not willing to risk hard-earned money on trading a range. I mean, there's just no point to that. I mean, that's not a lot of risk. That's not those kinds of trades don't offer great risk reward. I don't believe. I mean, maybe some people can trade the channel, but there's no surprises to the upside. You kind of know going in what your best case scenario is, and I prefer to take trades that you really have potential for 30, 40, 50% move. We might sell at 15 or 20, but when we take the trade, we never know if we're going to have the next big mover. So that's what happens when you buy stocks at new highs that have strong earnings or relative strength momentum. But when you start dealing with channeling stocks, it's a whole different ballpark and not what we specialize in. So, I mean, that's it for my presentation. I don't have much to give you. There's just no point in really putting together much of a long watch list right now. Maybe by the end of the week, we should have a better idea of what's going on, see what stocks hold up the best. So I'll open up the webinar to any questions. If you have none, that's fine too. It's a slow Monday.
So UUP and IYT. Okay. So let's take a look at IYT first. All right. I mean, IYT is holding up a lot better than most things, which isn't super surprising given the fact that the Dow is holding up the best of anything. So, it's got to tighten up now. It's a chop fest. If looks like we might set a higher low here compared to this low, if this day prints, what you need to see now is maybe a lower high and another higher low, but it's just probably got to consolidate for a little bit and tighten up, and then it could offer an entry to the long side. I wouldn't really be interested in shorting this here, but if the market cleans up to the long side, the only way that I see it would become a short candidate is if it loses support. Like, if let's say you have a sideways day tomorrow and then we lose support of this low, then you could see some pressure put on it. If it came down and tested, let's say, this swing low, then into a rally, it could be a short opportunity. But for right now, I wouldn't really touch this thing on the short side. As far as UUP goes, we're stuck in this trend right here. We have one touch there, and we sort of have a secondary line right here that maybe we'll break above it, maybe we won't. But I'm not really interested in doing a whole lot with this. I mean, I guess if anything, it could be a potential short, but for the moment, there's just there's probably better looking things out there, and currencies. There's so many things going on right now. Currencies can really act strangely when markets come unglued, and there could be a flight to the dollar. There's no question about that. But right now, this thing's in a downtrend, and I don't know that I'm really interested in shorting it here. And I don't know that I'd want to go long. But if it does, get below this swing low, if we get back down below here, that's a big support level. This thing could crack pretty hard. But I'm just kind of ambivalent. I mean, I suppose if it came up, broke this secondary downtrend line and consolidated, it's a possibility it could go higher, but I just don't have a lot of opinion about it. It's kind of a sloppy chart. Okay, let's see here. What else do we have? IWT, UUP, WFM, Oracle, WFM. Whole food markets acting well. Nice breakout last week. It's holding up. It's holding up nicely. Really, what it comes down to now is what does the market do? I mean, if the market gets smacked, then it's going to be hard for anything to really rally or go anywhere. But it's one of the stronger stocks in the market right now. It just broke out of a nice range here, a nice trading range. and formed a pretty nice base, broke out on big volume. So I mean, it's one of the stronger things out there. I mean, I think if the market repairs itself, WFM is one of the stocks we have to be watching on the long side. It's definitely on the table as a long entry. If the market can clean itself up. But I just have little interest in being long anything right now with the sell signal on the table. WFM, we have Oracle. Let's take a look at Oracle. Oops, wrong. Here we go. I know Oracle is weak as anything. I mean, what's the ideal scenario for Oracle? Here's what I'd like to see. Like to see it hold this, maybe undercut it. Come down here, right down in here somewhere, just below this $28 mark. Maybe come down to 27.75, undercut it, and then rally back up into resistance of the 20-period moving average, and then form a reversal candle, and then look to get shorted there. Really wouldn't want to short it here. If it goes, it goes. The meat of the move was we caught on this, but I think it's a good-looking short candidate into a bounce and the formation of a reversal candle. And I think if it tests this level again, it's going to get whacked pretty hard. XME, we got knocked out of that a couple weeks ago, and it cracked again. All right, let's see here. Somebody had asked a question about the placement of stops. Let me just see here. Let me go back to that. Read that specifically. Discuss how we create your original stop loss location when you move it. Okay. Well, I mean, just to give you an example, let me zoom in on Oracle. It's can provide a decent example here. If let me look at a good spot, like right. Okay, a rally. This rally that occurred. Okay, if you notice, we formed triple top right here, or 3 days in a row. We tested that 29.80 range, and then the third day, which would have been I think last Thursday, what happened? We rallied up and tried to break above that, and then we reversed to close at the lows of the day. So that's a pretty strong reversal candle. If we got below this this reversal candle low, chances are it was going to really fall apart, which is in fact what happened.
All right, so the last two questions were from Roy. I'm assuming Ed didn't get to your answer. Please discuss how you create your original stop loss location and when you move your stop loss location. Stop loss location really depends on the chart pattern. No breathing room, really, for the most part, because most of our stops are below obvious points. You don't want to give too much breathing room. I used to give a lot of breathing room early in my career. If I were using the Oracle example, Ed had on this day, if I got short here, this is an early entry, by the way. If you were to get in right here, if you were to get at the the lows, the close on that day, on the 3rd, your stop would be 10 cents over this high. Breathing room, I used to give it a point, but what's the point at that? If it's a reversal bar, it should be the act going your way and not really reverse. So that's why I really try to look for reversible stops or significant outside days or something like that lets you know that the price action, and swing lows, because if the price action's there, it basically nullifies the setup. So those are the best kinds of stops. Even if it turns around and goes higher, well then, oh well, you basically had a good stop, and you can't there's some luck involved, some chance. So, but those are our favorite kinds of see most of our stops below reversal bars. And the reason why we don't give much breathing room on top of that is that in the end, the more breathing room you give, and you say you go a point below your stop, say it's 10 cents below a swing low is my stop, and say back in the day I used to give it a point or 50 cents, or I used to do like like a half an ATR or an ATR, anything. I used to just try and do that. All that simply is just giving people a little bit more time to see if their trade held up correctly. When we prefer just to get out right away, and then if it sets up again, you get back in. If you put your stop too low, and even your stop a point and a half gets stopped lower, gets stopped out, then you're like, well, maybe I should have put it a 0.75 or 2 points lower, and then you start playing those mind games that I used to do all the time, and then it's just easiest just that we feel just to get out quickly, and then if it sets up again, get back in. Treat it like another trade. Okay, BAC, Bank of America, long, we can't do anything with this. It's below May. We don't go anything that's below 50. It's trending lower. Here looks to be a pretty decent reversal bar today. I don't know what we can do with that, and maybe it bounces to the 20 and it's shortable again for all I know. So, looks pretty ugly. Nothing really to do with that. Dave, WMT. Walmart. This is pretty ugly gap down. Probably going to be shortable into a bounce into this area. Yeah, most likely. So, I don't know if I'd go long the setup. I mean, there's a 200 AMA too, so it's not like it has a lot of room for either. But a washout above here and a reversal bar could produce a move back down to the 200. Roy, there's also Ed's comments right there for the stop. Any other questions? I know there's just not a ton going on here today. And for new subscribers, I mean, it's like that for a bit. If you come in at the end of at the end of a buy signal and off of a fresh sell signal, you probably won't see much action. But you know, ETFs, Ed put our clients in, were pretty effective. I mean, Success already netted 1% in the account, so I mean that's about all we can do. We basically called the top almost, you know, without trying to call the top, and then we pretty much caught some downsides. So, I mean, I don't know what more we could do for that, but you know, we're probably gonna have a subdued amount of trading over the next week. BRKB. I guess it broke its downtrend line on the weekly and held, and it's just obviously broke another downtrend line. Not always is a lot. This is the range. I guess it's up around here. Eventually break through 82. That would be good. I don't know what. This isn't exactly what I try and scan for, but it seems to me it's tightened up a lot over the past since November. So it looks pretty good. As long as it holds 78 and trades in a tight range for the next few weeks, maybe when the market goes higher, this will too. So, yeah. Right now, it's not really a buy here. Market was strong. I guess you could initiate a buy here because it did break a little small downtrend line and it's moving out, but nothing to do right now, I would think. Any other questions? It's probably gonna be pretty slow over the next few days. So on Wednesday, let me know if you want to go over in the morning, if you want to go over patterns or what we do or how we find our patterns or what we scan, or I really don't know. I'm leaving it up to you guys if you want to learn anything. If not, you just want a bunch of stock picks, do that. If you want to learn any strategy at all, that's fine as well. Just let me know on Wednesday when we start the webinar or prior to the webinar starting in the chat room. That'd be fine. All right, so no other questions. Right now we're in sell mode. That's it. We'll do Wednesday a little beginner. I don't call it beginner. It's just, you know, everyone who really, most people can benefit from this or at least touch up on it. So that's it for today. We'll see you all on Wednesday, and I'll go over some patterns for all the new guys in here. Have a great day. Bye-bye. A refresher, yes.